Good afternoon and welcome to the Asian Midday Market Watch. Our guest today is David Kuo, the founder of the Smart Investor based out of Singapore. Now, David, great to have you on the show as always.
Thank you so much, Brian. Yes, good afternoon to you.
Now, before we get your insights, David, let's take a look at how crypto markets are performing, and then we'll look at regional stock markets. So if we look at crypto markets, we'll see that Bitcoin is now comfortably above 50,000. It's 53,867.2. It's down 2.2%. Ethereum is at 3,571.61. It's up marginally at 0.85%. Now, if we look at regional markets, the Nikkei is at 28,170.6. It's up sharply 1.78%. The Chinese markets are open today, and so the Shanghai Composite is at 3,579.96. It's up 0.33%. The Hang Seng is at 24,636.46. It's down 0.26%. The ASX 200 is at 7,317.4. It's up 0.84%. The Kospi is at 22,957.87. It's down 0.05%. Now, closer to home, the SGX is at 3,104.54. It's up 0.11%. Rounding up the numbers at the FBM KLCI on Bursa Malaysia, we've got 1,564.72. It's up 0.22%. So, David, what is your view on market performance today?
Well, some people might say, oh, happy days again. Yeah, everything's actually sort of gone back to normal. If you have a look at the Dow Jones over the last 3 days, the Dow Jones has put on nearly 1,000 points. And so there'll be a lot of happy people out there, particularly those people who have not sold shares, didn't get frightened out of the market. They will be happy. But I'll tell you something, Brian, over the last 3 days, I have been buying shares. In fact, I was buying shares even before the 3 days, because when the market looks cheap, I just think, well, this is a good opportunity to go and buy.
And so, David, did you rotate out of tech? Are you one of those that rotated out of tech, and more into value stocks?
Oh, for goodness sake, Brian. I mean, stock rotation is something that is dreamt up by fund managers and by talking heads on television who try and sort of get people to trade shares, sell the shares, and they make a commission, buy some more other shares, and they make a commission. No, I'm not into that. A good analogy is a bit like when you go into a supermarket and you see a couple of queues there. And then you pick a queue and you think, oh, my queue isn't actually sort of moving as fast as the one next door, so I better jump to the other side. Then you suddenly find they change cashiers on your previous queue. They've got somebody who's far more efficient, and that queue just zooms along. And I think what you really need to do when you are in the stock market is to go out there, pick some good companies, pick some good shares, hold on to them. When the market is down, buy some more. When the market is up, buy some more as well. And you're constantly adding to it. And then you look back after 5 years, 7 years, 10 years, and you go, that was a really good buy then, wasn't it? Yeah, regardless of what the prices were at the time, because good companies, they'll be able to increase their profits. They'll be able to increase, in my case, the dividends that they pay me, and consequently, the share price will go up as well. So I'm not a stock rotator, no.
So, David, one of the things that's worrying markets across the region is the fact that power shortage issue in China, and how it's going to impact not just China, but really the rest of the world. Could you share some insights on what your thoughts are on this?
Well, I think, first of all, people need to understand why there are power outages over in China. And it's primarily because the cost of the raw material inputs, and if you have a look at something like coal prices have gone up because, there is a huge demand for coal all over the world, even though a lot of countries are saying that they are phasing out their coal-powered generators. But still, energy prices are going up. And in the case of China, they don't want to pass on the energy price increases to consumers because they don't really want to upset people. And that is one of the problems with a command economy like we have in China. Any other place, any other developed economy, if energy prices are going up, they tell households, they tell consumers, I'm sorry, your electricity price or what your gas prices are going up, and there's nothing I can do about it because energy prices are rising. But in the case of China, rather than to pass on the energy price increases to consumers, they turn the power off. I mean, can you imagine that?
But you know, it's a fixed price. They can't sell the energy for more than it costs to produce it. So,
well,
so
you're absolutely right. What is happening is that the power generators are saying we're losing money for every therm or for every watt of power that we're pushing out. So let's just turn the power off. I mean, can you imagine if you're living in a condo 30 floors up and they suddenly go, the power's gone off and the elevators aren't working. You're going to have to walk up 30 floors to get to your flat. So rather than if it was me, I would much rather pay a little bit more for electricity so I can actually get up to my 30-floor condo than to actually have no electricity and to have to walk up 30 flights of stairs. Well, 60 flights because you've got to turn around twice. But I think this is the problem. China is a command economy, and it's been putting its resources into things like property development, and they're taking it away from other places, such as infrastructure building, where they should really sort of be building much more efficient power generators. They aren't doing that, and now we're paying the price. But going back to your question, will it have an impact? I think it will. I think we're already seeing supply chains being broken all over the world, and this is just another supply chain problem that will have an impact on any company that is manufacturing or reliant on manufacturing in China.
But one of the things which you alluded to, David, is also this: because energy prices and raw material prices are going up, coal, gas, oil, it looks like we're going to face a period of inflation.
Yep.
And that's going to already impact, if you look at close to home, Southeast Asian economies, the whole story on battling COVID-19 has been buried. That problem hasn't actually gone away. Now you've got a new problem on top of it, which is imported inflation.
Oh, you're absolutely right. And that is why when the central banks, several months back, when people were talking about the possibility of inflation, they were saying, oh, this is only transitory. The whole point is, how long is transitory? They never actually told us. I mean, it's 2 months transitory. Now it's looking like it's probably going to be maybe 6 or 8 months. Well, 8 months is not transitory. You make a baby in 9 months, yeah? And so therefore you can't just sort of say, oh, you know, this poor lady is pregnant. It's only transitory. She's going to have to carry that baby for 9 months, right? So in the same case with this inflation, in 9 months' time, what's going to happen then? So I think inflation is going to be a problem, which goes back to some of the earlier interviews that you've had me on your show, and we're talking about pricing power. It is so important to look for companies that have the ability to pass on any price increases that they have to consumers. It's going to hurt the consumers, but if you don't pass on those price increases, as we have seen in the case of China, if you don't pass on those price increases, first of all, you're going to lose money. And secondly, those people are going to suffer, because if you lose too much money, you're going to say, I better not supply anything to you, because what's the point in doing so?
Yeah. Now, David, I want to ask you another question, because this is obviously dominating market observers for the whole week, which is tonight's non-farm payroll number. What's your view on what the expectations are moving forward?
I think it's going to be good. And I think what we're seeing, and this is something that people miss the point from, which is that we have had a huge shock to the global economy, and it's taking time. A lot of people seem to think, oh, you know, let's just flick a switch and everything will go from bad to good. It doesn't happen like that. It takes a while for people to get used to what is going on. And so I'm expecting the non-farm payrolls to be good. I'm expecting employment in the US to be good. And just have a look at your Malaysian employment figures today. The unemployment number is coming down slightly because many of the lockdown measures that you've had previously are now sort of being reversed, and slowly the economy will recover. And similarly in America, people will start going back to work. And once they start doing so, then I think the unemployment level will start coming down. And if that is going to be the trigger for the Fed, because they always said that they are looking at the unemployment numbers in America, if that is starting to look good, then I think the Fed will have no option but to start thinking about increasing interest rates. At some point, they will have to do that because it cannot sort of maintain these sort of low interest rates when there is so much pricing, when there is so much inflation in the system, Brian.
Now, David, as always, thank you very much for coming on the show, and thanks for your insights.
Thank you.
Now, we've been speaking to David Kuo, the founder of the Smart Investor in Singapore, on Biztech's Asian Midday Marketwatch. I'm Brian Fernandez. This video will be on our social media platforms as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.